Let's take a trip to the 1980s. The shoulder pads were big, the hair was bigger. The heyday of the stock market, there was a long bull run. The Dow was trading below 2,000 for much of the decade. You had to call your broker to make any trades on your behalf. Fast forward to today and you can manage your portfolio from the comfort of your home. With a click of a button, you too can buy the latest meme stock and guarantee yourself some sweet, sweet chicken tendies. All kidding aside, everybody, my name is Jordan Griffin, and today I'm going to talk to you about one of the ways in which investing has truly changed for the individual investor. One such change that we've seen the rise of in the last decade or so are robo-advisory firms. Now, these are firms or companies that will manage your portfolio for a much lower fee than a traditional financial planner would. However, now instead of having a human touch on your portfolio, it's all done by computer algorithm. And today I'm going to be talking about Betterment and why I think it's a great tool for you to use, especially if you are a hands-off investor. But before we get started, I would really appreciate it if you could destroy that like button down below, as it really does help out the channel. As I mentioned, Betterment is a robo-advisor that was founded back in the depths of the financial crisis of 2008 to 2009, right around that time frame. Now, getting your account set up with them is super easy. All you have to do is provide your age, your income, and a goal. And now that goal will vary, whether you're planning for retirement, maybe you're saving to buy a house, planning a wedding. They'll provide you with some different profiles that you can utilize in different portfolios based on your goals. You'll also then be prompted to add any external accounts, like your bank, maybe your brokerage, or other retirement accounts, so that you can get a clear picture on Betterment of what your total nest egg is. While you are able to link external accounts, Betterment will only provide management on those funds that you currently have invested with them. Now, in terms of account types, you're able to open up either an individual brokerage or a joint brokerage, both a traditional IRA, a Roth IRA, and a SEP IRA. Unfortunately, they don't provide access to 529 college saving plans or solo 401k accounts. Now, the company's algorithms check your portfolio balance daily and look for any significant drift that might have occurred and if there is any rebalancing that needs to happen. They'll buy fractional shares for you as well so that your money is never just sitting there. Unfortunately, the company does not currently offer any access to individual stocks or REITs. So if those are some type of funds that you're looking to have access to for a more diversified portfolio, or you like to tinker around a little bit more, then I would probably look elsewhere. Let's go ahead and talk about the fees associated with Betterment. Now, as they are a digital-only platform, their fees are going to be significantly lower than what you would find with a traditional financial planner. For instance, the digital plan is currently only 0.25% of funds per year. So to put that in perspective for you, let's say for every $10,000 you have invested, that is $25, almost at 25,000, only $25 per year. Digital is a great option for anybody just starting out with investing, as they don't currently require any minimum account balances to begin. So if you've got a few $1,000s just lying around that you're really not sure what to do with, you can just go ahead and start with a digital account and it'll only cost you 0.25% per year. For the premium plan, which does require a minimum balance of $100,000, they will be charging you 0.4% of funds per year. This plan does provide access to a team of CFPs, which is why there is a minimum account balance requirement and why those fees are a little bit higher. So the fees are a little bit higher and the account balance is required in an effort to make it more profitable for the company, because with the digital-only plan, you're really getting hands-off investing. No one's really taking a look at it. The computer algorithm is really just managing it for you. Now, Betterment is able to provide such low fees due to the fact that they don't have a physical address. There's not Betterment offices in every single town in the nation like you'd see with, Fidelity or a Charles Schwab office. They can provide such low fees because it's digital, online only. Betterment does provide some advice options that are charged to you at a one-time fee. In 2020, the prices were lower, so they did increase this year in 2021. So for $2.99, used to be $1.99, that gets you a 45-minute call with a CFP to kind of, walk over some of the benefits of Betterment, go over some of the tools, and kind of provide a game plan for you to begin investing. For $3.99, which was $2.99 in 2020, this will get you a 60-minute phone call with a CFP again, but this is more geared towards specific life events, whether you're planning for retirement, maybe discuss any college savings needs, maybe you're getting married and you need to discuss, how do we set ourselves up for success. And they'll also take a look at, kind of your overall financial health and provide some guidance. As these are only one-time fees, this might be a good option for you if your account balance is below $100,000 or you've chosen not to increase your plan to the premium version. So this is a great option if you need to discuss something with a CFP, a specific life event, or a specific financial situation. As it's a one-time fee, you don't really have to worry about the cost that much. Back in 2020, Betterment added cash reserve. So this is essentially their high-yield savings account. Currently, the APY is at 0.4%, which today is Valentine's Day 2021. So I know a year ago, interest rates probably would have been a lot higher. But as that APY does tend to track with interest rates as a whole, I don't expect that number to go up anytime soon. In fact, Jerome Powell has mentioned numerous times that they probably don't plan to increase rates anytime until probably 2023. A really nice feature of the cash reserve account is it does allow you to place buckets into your savings. So if you want to save for specific events, you can do so. So if you want to save for a trip, do you want to save for, if you're going to pay for your own wedding? Do you want to save for an RDX 3080 so you can start mining Dogecoin? You can set up buckets and do that. To pair with the cash reserve account, Betterment has created a checking account as well. So you get the debit card. They also provide reimbursement for any ATM fees that you may come across. By pairing the checking account with the cash reserve, Betterment has enabled a tool called two-way sweep. Now, this will allow you to move any unused funds, which essentially means that Betterment will run a cash analysis on your average spending, and anytime there are an excess of funds, it will move those funds from your checking to your savings. It will also move funds from your savings to your checkings if you have set parameters for it to say, I need my checking account to always be at this balance or above, so if you hit below that balance, it'll move those funds. It'll also send you an email notification when it is going to do a sweep, so you can either approve it or deny it depending on your situation. So why should somebody use Betterment? Why am I recommending it? Well, I think you should use it if you are a novice investor. Somebody like me who in 2016, I had some excess funds laying around. They were sitting in a savings account at a big bank earning next to no interest. And after having a conversation with a coworker of mine, he had mentioned a Roth IRA. So I did a little research on what that was, and I was really looking for a tool that I could utilize where I could just throw money into it. The asset allocation is handled for me. I don't have to think about it. I just have to make sure that I am steadily investing every month or whenever I have excess funds. Now, you do lose the ability to have access to REITs or individual stocks like I had mentioned earlier. However, most of the ETFs are backed by Vanguard, which traditionally always have very low fees. In my Roth, I believe my average fee is like 0.05%. So it's very low, along with the management fee. At most, I'm paying, 0.3% of funds per year. Betterment is a great option if you have a small amount of funds, as they don't require a minimum account balance to begin utilizing their service. It's also a great option if you don't want to spend a bunch of time researching individual companies, looking over financial statements, studying who's on the board, figuring out who the CEO is, all those things that go into researching individual companies. This is a great option if you want a place to just kind of put your money, set it and forget it, and focus on other things. And with that, we'll wrap up the video, everybody. Thank you so much for watching. If you found the information helpful, please give us a like, please subscribe, comment down below with maybe, do you utilize Betterment? Do you have another tool that you prefer over Betterment? Please do these things, it really does help out the channel, and we'll see you next time.